If you're an average investor, an average Canadian investor, you're probably a little concerned about the volatility on the stock market that's been happening since the beginning of 2021. And you might be one of those people thinking that, should I even be on the stock market? Actually, two things you can do. First, you invest into ETFs, so you sort of diversify yourself from start. And the second thing, you build up your dividend portfolio. And the combination of two, you build up your ETF dividend portfolio. To make it even better, you just add another sort of pile to it, which is monthly dividend ETF portfolio. It means that you're going to be getting dividends every single month. You are diversifying yourself into hundreds of stocks with buying a single share. Hello everyone, Alex is here. I changed my t-shirt because I can. And today we're going to be looking at top 5 high dividend yield monthly paid dividend ETFs and which actually I invested into. And what is my strategy for these ETFs and why I'm doing this. You can invest a part of your portfolio to ETFs like that and still have a pretty good growth and consistent dividend payouts every single month. And if you add a drip on top of that, you're going to be reinvesting these dividends back to the stock market every single month. And if you want your dividends to skyrocket to the moon, you got to smash the like button. Just do it. You'll see the results in 30 years. And the first one is going to be iShares Canadian Select Dividend Index ETF. The ticker symbol is XDV.TO. So this ETF is looking to emulate the performance of the Dow Jones Canada Select Dividend Index. And the majority of their assets actually sits in the top 10 holdings. And also, they're pretty heavily invested into financial sector. Well, pretty much the whole Canada is just a huge bank. The MER for this ETF is at 0.55%. which is on the higher side if you compare to the other passively managed ETFs, but you're on the lower side if you compare to the actively managed ETFs, where the fee can go all the way up to 1%. Or for, mutual funds, where the fee is at 2.5%. If you invest $25,000 into the ETF portfolio, you would have to pay around $62.50 in fees per year. For the same $25,000 portfolio on mutual fund with a fee of 2.5%, that's basically the average fee for the mutual funds, you gotta be paying $625 per year. Now looking at their top 10 holdings, which again represent around 55% of their entire portfolio, we can see stocks like CIBC Bank, Canadian Tire, Bank of Montreal, Royal Bank, Labrador Iron Ore Royalty Corp, TC Energy, Bank of Nova Scotia, Bell, the Toronto TD Bank, and National Bank of Canada. You can see there are a lot of financial banks in the top 10 their holdings. If you are invested into financials already somewhere else, it might not be the best ETF for you because you're going to add another huge pile of stocks into a financial sector. The dividend yield for them is on the higher side. It's actually around 4%, which is pretty good for the ETF, for a passively managed ETF, right? Where you're diversifying to a lot of companies, a lot of sectors at the same time. You're not necessarily managing any of that. Let's move on to the next one, which is the BMO Canadian Dividend ETF, and the ticker symbol is ZDV.TO. So this one is actually pretty popular ETF for a couple of reasons. The first one is that their MER is actually on the lower side, is at 0.35%. So even comparing to the XDV we just talked about, it's pretty low, right? And even comparing to the other passively managed ETFs, not necessarily dividend ETFs, it's also on the lower side. And this ETF is trying to replicate the performance to the extent possible also of the Dow Jones Canada Select Dividend Index and comprises of the top 10 stocks selected by Dow Jones. The approach they're taking is very similar to XDV. They're also a lot into financials, around 40% of their assets. The dividend yield they have is also on the higher side, is around 4.13%. Top 10 holdings for this ETF. We see stocks like Bank of Nova Scotia, TD Bank, RBC Bank, Enbridge, hello, my favorite stock, CIBC Bank, Bell, Canadian National Railway, Bank of Montreal, Talos, and Nutrien Ltd. Even looking at their top 10 holdings that represent around 46% of their total assets, you can see exposure to financials like crazy. Best stocks are, the best dividend paying stocks are also either financial stocks or energy. Let's move on to the next one, which is pretty exciting one, and it's iShares Core S&P TSX Composite High Dividend ETF. The ticker symbol is XETF. EI.to. This ETF emulates the S&P TSX Equity Income Index and follows optimum diversification that enables you to pay monthly dividends to its investors. The fund's primary focus is to be long-term foundational holding and minimizing the risk to the extent possible, which basically means that this ETF is trying to diversify their exposure to different sectors a little better than others. As you can see from the sectors, that financials now at around 30%, which is already pretty good. And the energy is around 28%. So we have these two players that represent around 58% of our holdings. Those are the companies who actually perform the best in Canada. Looking at their MER is actually pretty low. It's at 0.2%, which is pretty low even among all other passively managed ETFs, not necessarily dividend ETFs. And their current dividend yield is also pretty high, it's around 3.9%. Let's move to the next one. Now we're going to be looking at Vanguard ETF. The Vanguard FTSE Canadian High Dividend Yield Index ETF. The ticker symbol is VDY.to. And this one is actually pretty amazing for the most important reasons actually. The first one is their MER is pretty low at 0.2%, which is how low you can get with all these dividend ETFs. Is probably the lowest you can go. And their current dividend yield is also pretty high, it's around 3.9%. And now what this ETF is actually doing. So they are trying to emulate the performance of the FTSE Canada High Yield Index and invest into a variety of high dividend paying stocks across small, mid, and large cap companies. So this ETF actually diversifies their investments into 3 different sizes of businesses: large, medium, and small. So we're not only investing into the best and top, the largest companies, we also have some allocation into smaller companies and mid-sized companies. I like this approach because those companies tend to actually perform better than the large companies because they have more room for growth. The one thing that is not really good about this ETF is, again, the exposure, the sector allocation. They have around 58% allocated to financials. And if you add up energy to it, which is 23% of their entire portfolio, you end up with around 80% of your investments or your entire portfolio is allocated to financials and energy. Yes, you get the best, probably so far the best yield, but you are exposed a lot into financials and energy. And again, you can see the yield is higher because they have more on financials and energy. And those are the companies who are actually paying these dividends, who actually have the highest yields on the Canadian stock market, right? So hence the yield is high as well. Looking at their top 10 holdings, which represent around 50% of their entire portfolio, we can see stocks like RBC Bank, TD Bank, Bank of Nova Scotia, Bank of Montreal, CIBC Bank, all the banks, right? Basically, there's like Enbridge and TC Energy, so all the energy stocks in there as well. So their holdings are very similar to the other 3 ETFs we just talked about, but they also invested into mid and small cap companies. So again, look at your entirety of your portfolio and see what's happening there. And if you're okay to add more of financials or energy into your portfolio, then this is one of the best to go, right? And now we move to the best high dividend paying ETF, high dividend monthly paid dividend ETF on the Canadian stock market, in my opinion. And this one is by iShares, which is the core MSCI, Canadian Quality Dividend Index ETF. The ticker symbol is XDIV.to. They have the lowest MER possible on this dividend ETFs, which is 0.11%. And their current dividend yield is also pretty high, it's around 3.9%. The good part about this ETF, they have a little lower exposure to energy, around 15% of their portfolio. On the financial side, they're also pretty high, 55% of their portfolio allocated to financials. And now let's take a look what this ETF is actually doing. So this ETF seeks to provide long-term capital growth by replicating the performance of the MSCI Canada High Dividend Yield 10% Security Capped Index. So we're not only looking at dividend-paying companies with stated dividends, we're also investing with this into companies that consistently increase their dividends, which is pretty good because this is the way how you can compound your dividends, how you can compound your investment portfolio over time. When your dividends are growing and your reinvestments of your dividends are growing as well. This ETF is designed to be a long-term investment. For me personally, all my investments on the stock market are for a long term because that's the way to go. You got to follow the rule of time in the market, not time in the market, right? Because the longer you are on the market, the more returns you're going to be getting, the better your performance is going to look like, and the faster you're gonna get to your goal. For me personally, I invest in 3 of those: the XEI, the VDY, and XDIV. So these 3 are my favorite, and I think that the XDIV ETF is becoming more and more popular because of the lower MER they have compared to any other high yield ETFs on the Canadian stock market. And that's great, because the lower the MER of your portfolio, the better the returns you're going to be getting from your investments. Subscribe to my channel as well, hit the bell, leave me a comment, keep investing, keep getting your dividends, keep reinvesting your dividends. Cheers, bye.